All right, I muted myself. Hi, everyone. I'm still in my work clothes because I've been running around all day. So I am coming to you guys hot after dinner with a fresh beer to enjoy for a little Wednesday. Um, I wanted to start off tonight just with some announcements. There's really nothing new other than the fact that pumpkin spice is still available. So use all of your promo codes from Team Cup and get those challenge packs out to get those people $75 free value. And then we will kick it off with some recognition. And I'm going to do something a little different. We'll do all the normal recognition, whoever from teams has anything to shout out. But also, I want you to guys be active in the chat. One thing my team and I do is we do like little wins of the week. Maybe there's not a rank advancement or a new success starter, but you have a win of you finished a program or some non-scale victory. Shout out your own win for the week in the comments, and I'll do that as well as we go through the different team recognition. So if anyone has their own team recognition, go ahead and unmute yourself.
I want to shout Christine out. I don't think she is able to make this, but she got her first customer this past week, her first enrollment. She is staying committed to her social media. She is sending out her 5 invites today as we speak, although I know it's killing her. We keep calling her out in the Team Cup group. But I just want her to know we're super proud of her because she's really been hitting the ground running. Oh, that's awesome, Jess.
I want to shout out Maddie on my Team Cup team too, because she's been working so hard to really shift her social media to make it more authentically her. And she's taken the feedback and like implemented it. And it's been amazing to see her grow through Cup.
I want to do a little teaser announcement and say you guys don't want to miss next week's call because it's going to blow your mind, and we're not telling you yet. You need to show up and be there because the announcements that we have coming for what we've been working on behind the scenes is going to blow your mind. So spread the word.
Any other wins for the week? I know that there are so many faces on this call. Y'all, let's get 3 more added and then we'll get introducing to Josh. 3 more wins for the week. Who's going to add something? Don't be shy. Yay, that's amazing. Congrats, Maggie and Lauren. Okay, so as I'm introducing Josh, I'll let you guys keep typing in there. So I met Josh actually through one of these calls three years ago, because this has been like a regular type of call around this time of the year. And as being the numbers person, I love these calls. Y'all, taxes are not boring because if you are saving money, that is exciting. So anyways, I've been on these calls every time, and Josh and I started working together last year with my taxes, and then I used him again this year because I had such an awesome experience with him. It honestly, like, there's so much time saving to it, but also he comes with so much expertise. He's worked with so many other Beachbody coaches. I'm sure he'll be able to share that background. And as my business grew, it was something that was really important to me to be smarter with my money and knowing which business expenses could be saving me money in the long run. So with that, yeah, and I know Natalie uses him as well, and Kelsey. Josh, go ahead and introduce yourself, Raising Sense, the family-owned business, and go ahead and kick it off.
Yeah, so hi guys, glad to be here again this year. I see we have like 15 participants. Hello to everyone. Yeah, as Jessica said, I've worked with a lot of Beachbody coaches, Mackenzie, Natalie, Kelsey, Ruth Schroner, so quite a bit of people. Helped them over the years, save money on taxes, sort of navigate the waters, figure out where to go, what to do. I've made it a lot easier this year. I'm hoping, knowing that you guys all do this, I created this just for you guys so that you may be able to share this with everybody. I don't know if you can see my screen or not. Yeah, so I made this specifically for Beachbody coaches so that you can sort of see, here's how much Beachbody income I made. Here's how much I spent on yoga balls and weights and Shakeology and cell phones and workout clothes. Here's my expenses for travel, and here's how much mileage I booked, and here's how much home office I spend. So I'll make sure to get this to Jessica so that she could send this out to everybody. But this way, at least it's a good way to start and put the things in the right place. I was hoping that would help. I ask Jessica and everybody else, I try to be as transparent and accessible as possible. So I'm sure Jessica will give everybody my information, text message, email. Text message is the best way to get me, but my whole goal is to be a resource for you guys so that if you have questions, can I write this off? What do I do about this? I want to be able to help. So that's sort of the basic premise of where I'm coming from with my business. I've been doing it for 11 years. Like she said, family owned. It's me and my assistant, and we've been friends since high school. So I consider her family. But as you can see, I'm in my house. This is my home office, and then I have an office outside of here as well. But I work 90% from here in my pajamas most of the time. So I'd love to answer any questions you guys have. One thing I will say that is not talked about a lot when you guys start the Beachbody sort of journey, I wanted to sort of throw this out here because I've had a lot of people sort of get hit over the head with taxes because they're so worried about and focused on building their team and building their brand and making money that it sort of hits them in the, kicks them in the butt at the end of the year when they sit down and they file their taxes and they owe quite a bit of money. So sort of wanted to show this to you just so you could sort of see what I mean. So when you guys start off in Beachbody, you start off in column 3 as a sole proprietorship. It's just your name and social security number. So if you make 100 grand, tax you're going to owe is about $25,000. If you get an LLC, that's great. There's some legal separation there, but absolutely no change in how much you're getting taxed. It's not until you switch to an S Corp and change up how the business runs that you see some savings of about 10 grand. So there's some work that needs to be done to get to this point, but just know that starting off and focus on making money is great, but you also have to have somebody to help you plan it, or else it's going to kick you in the butt at the end of the year. I hope that helps just a little bit. So Jess, if you want to open it up for questions or whatever, I'll be glad to answer.
Yeah, let me chime in for a couple things. So like you started off with $100,000. Most of the people in this call aren't making that with their Beachbody income. Many of them probably have some sort of side full-time job or part-time job. In terms of Beachbody income, I think it'd be really helpful for them to hear different things that qualify as deductions, and also kind of clarifying for people what a deduction does in terms of their taxes, both on the Beachbody side alone, and if what that means for their full tax refund, right? So I think if you can go with that first.
Yeah, sure. So a lot of the questions are, all right, we'll start basic. Like what is a deduction, right? So you get a 1099 from Beachbody that says you made $10,000. Okay, great. You put that onto your tax return, it's going to trigger quite a bit of tax, $2,500 to $3,000 worth of tax right off the bat. In order to reduce that tax, you've got to tell the IRS on your tax return, I had to spend money to make that $10,000. In order for me to make that $10,000, I had to go and travel to an event. I had to buy filters for Instagram. I had to buy advertising. I had to buy yoga pants so that I look good in my Instagram pictures, et cetera, et cetera. So you have to keep track of all of these expenses, total them up, and put them on your tax return. So the $10,000 then gets reduced by your expenses, let's say to $3,000. But if you don't put that on your tax return, if you forget an expense, it's literally like throwing money out the window. So keeping track and staying organized with which expenses you've used throughout the year is really, really key.
Yeah, so to give you guys an idea, and Josh, I'm sure you can send this to me in a file. This is his like Schedule C business operations from when we started working together, and it has all of the different categories of expenses. So I started for each year, a Google document is what I send him. I don't know if he likes my format or not, but that's what I do. And
that's great.
Okay, it works. So I basically put the purchase date. I'll share what I have with you guys. That's fine. The purchase date, like as a template. I put the cost, so what I paid. Then I put a like what it was category, and for me it'll be things like Beachbody, my Shakeology. Maybe it'll be my virtual assistant. Maybe it's my Summit plane ticket. Like just to give you a couple ideas. And then I put the category, which is what I pull from this sheet. And then I put which coach. So we should talk about this too, but if it was myself or my spouse account, because right now we're not married, so we're filing taxes separately. And then where I have my receipt. I'm personally a paper person, so I am printing everything and putting it in the 3-ring binder. But if you're really good with digital stuff, save that as a PDF, screenshot it, whatever, and throw it in a Google like Drive. But like Danielle said, keep receipts for everything. I'm talking things that you might not even think about, like your meals at Summit. It even could be if you're driving a lot, like driving significantly to Super Saturdays, that's considered a deductible expense. Your postage and the gifts that you have for challengers, if you're doing that, also deductible expense. Heck, using Josh as a service is a deductible expense.
For sure.
So
I always say if it's in any way, shape, or form related to making money for Beachbody, it's a deductible expense. And even if you're not sure, putting it down is better than leaving it off, because if you leave it off, then there's no way that I would ever know about it or anybody else would ever know about it to put it on there. And at least you can put it down there and say, I'm not sure about this, but is it? And then we can have the conversation.
Yeah, I had a couple categories I left blank, but like one of the big ones last year, I bought a new phone that was $700. 25% of that is like $175. That's how much money I'm saving towards my taxes. I mean, if you put it in that perspective, it's like, holy crap.
Yeah.
Can you talk a little bit about, crap, I just totally blanked. Let me see if there's any questions yet.
So just while you're thinking about that, the mileage thing is key too, because it's 58 cents per mile. So if you drive 100 miles, it's $58 of an expense. So that is a big deduction for people that are using their car.
Josh, what were the tips that you gave, just say new coaches? Let's say you're starting out or you haven't earned a lot. You're making, between $500, $1,000 a month, whatever that may be. What's your advice for those coaches, in the $1,000 range and under? You want them saving 10% a month of their income, or what does that look like?
Yeah, that's a good question, because I think we had this conversation when you first started out, Natalie, is like, what do I do here? And the easiest ratio I always use is that whatever you're making on Beachbody, I would put aside 10%. So if you're pulling in $1,000, save $100 in a savings account just for at the end of the year. Now, what happens is that the expenses are going to reduce that $1,000 down, and then the tax on it is going to be less than $100. So the 10% is just an easy ratio to do on what you're bringing in. One of the things I will say, if you're just starting out, there may be more expenses than income, which is not a bad thing, because if you're working a W-2 job or this is a side hustle, I get it that if there is a loss on the Beachbody for the first year, it's only going to benefit the W-2 job or the main income. It will make your refund higher on the personal side. So even though you may not be making a lot right off the bat, still keeping track of every expense is hugely important.
Yeah, that's where also like some of this kind of gets personal. And Josh will work with you on that level. Like W-2, I just put on there is like your full-time employment where you're not an independent contractor, the 1099 form. But that's something where like, depending on my full-time income, he can help me adjust the withholdings that my company, my full-time job takes away, so that that is incorporating what I'm expecting in terms of taxes from my Beachbody income, if that makes sense. So it's already coming out of my paycheck and I don't even have to keep it separate individually because I'm planning for it extra from my full-time job. The other thing too is if you've taken Success Club trips, that goes towards your Beachbody income. You'll notice like when you get your 1099, you're like, huh, if you track your income from the weekly paychecks, you're like, that didn't line up. Well, that difference is the Success Club trip, what they're valuing it at.
If you guys are like not big on tracking, because this is constantly something that I fight with myself, I would really recommend, and I'm sure Josh can say this too, like open up a debit card just for your Beachbody stuff so that it's really easy for you to know what you're spending, what you're putting in and out, and it makes the tracking a lot easier at the end of the year so that you know, okay, if I go out to a meal with another coach, I'm going to use this card for that, and I'm going to automatically know when I go into my expenses for the month that everything is there on that one card rather than mixed in with your family expenses and that sort of thing.
Yeah, that's a great point, Danielle, because at the end of the year, I can't even tell you how many people come to me with, oh, I got my 1099, and then I ask them where their expenses are, and they have to pull it from three checking accounts, a credit card, a PayPal account, and it takes hours and hours and hours for them to compile this information. Having one bank account or one credit card for all of your business stuff is a huge, a very important piece of it. So that's great advice.
You guys, I love this stuff. So like I can get into the all nitty gritty, but keep asking any questions. And it's like, even could be, so for, I guess one of the big things could be, and I actually haven't asked this before, so Josh, let me know if you know, Beachbody only sends a 1099 if you make $600.
Yeah, so that's a federal regulation, meaning if anybody pays you for services or goods above $600, they're going to send you a 1099. The only difference is if they pay you through PayPal or something like that, then PayPal will send you a 1099. So if you didn't make 600, you are not going to get a 1099, but you are still technically liable for putting the money on your tax return.
Can you talk more about an S Corp? Like how much money do you recommend people be earning annually in their business before they step into something like that?
Yeah, so
Forward thinking for people, but
yeah, so it goes back to that original sort of comparison of sole proprietorship LLC S corp. If you start off in the Beachbody thing, you start off with as a sole proprietorship is what they call it. So it's your name and social, and then when you gain some traction, my recommendation is always to file and start an LLC. It's not going to change anything on the tax perspective, but it'll give you a separate business bank account that you can run everything through. And then it gives you the flexibility to then scale up. So at a certain point, there's sort of a break even for when it makes sense to scale up to the next level. And that level, I've found through my experiences that it's $50,000 after expenses. So if you make $75,000 and spend, let's say, $40,000 to make that, you're not at that level yet. You're still good as just an LLC. But if you made 100 and you only spent 20,000 to make that, your net income or your income after expenses is now $80,000. That's when it really makes sense to scale up, and the amount of money that you're going to save on taxes is worth the work and fees to get to that point. So let's say the bar to reach is $50,000 after expenses.
Hey,
the, go ahead.
I was going to say, it seems like in the chat, can you talk a little bit about what typically Beachbody coaches write off as like products and that sort of thing, like things you see them write off in general?
Yeah, so I see anything from nail appointments, and I say that, but it's not like an exorbitant amount either, because there are, you know, definitely personal pieces of this. So what I do is I tell them to put everything on there. So if there's lashes, if there's nails, if there's hair salon, I put it all into one sort of uniform category, and then I back out a personal side of it. So if you spent $5,000 on your nails over the course of a year, we're going to prorate that for personal use and then expense some of that, because just like if I was to go to a corporate position and I had to get my hair cut and my clothes ironed, it's sort of the same thing. So that's one area. One of the things too is supplies, workout uniforms, workout, I don't know what they call them. My wife has them. They're big, heavy balls. I don't know what they're called. She throws them around the room and stuff like that. Weights.
Medicine balls.
Medicine balls. That's the word. So medicine balls, weights, bands, all sorts of things like that you guys use to work out. The mats, a bunch of supplies that you guys can write off. Meals, Starbucks, I see a lot. So there's also gifts you guys give to your coaches. Those are a deduction, and those can be in the form of gift cards. It says KDD, exercise equipment isn't limited to Beachbody equipment. That's correct.
Yeah, so like think about it. If you guys go out to lunch with one of your coaches or challengers, or even just someone that you're talking to about the business that they haven't even signed up, that's a write-off. So like
Sure.
when I say keep the receipts for everything, just like keep the receipts for everything.
Yeah, it's better to have it than not have it. That's my motto. Is so, because at least we can have the conversation about if it is or is not at that point. Let's see other ones that I mean, meals and entertainment is a big one. Travel for sure. I mean, you guys do quite a bit of travel to get to and from events, to train coaches. Oh, I also see like virtual assistants. That's a big one. Zoom, dues and subscriptions, any sort of computer software used for advertising.
What about like all the products, like the monthly shipments and everything?
Yeah, so you mean like the Shakeology? Yeah, so that's definitely all an expense for the business. So I would keep track of all of that information as well.
I have a question. When do you like, so for example, I used to pay, like, save a percentage every month, and then I had a savings account, and then at the end of the year I would just give you a bunch of money, and then then people start paying like quarterly, and now me and you for the last 2 years I pay you monthly so that I don't owe anything at the end of the year. When do you recommend, or in what situations do you recommend coaches for this business pay monthly, quarterly, annual taxes? Is it based on a salary, or?
It's a good question, and it's so one of the things that I've realized is that people really don't like me when I tell them that they need to cut a check for $25,000. They don't like me very much, and I don't like having that conversation. So there's a couple ways to sort of mitigate that, and one is to pay quarterly estimated tax payments. So you make 4 medium-sized checks versus one huge check, or the monthly piece. The monthly piece is only tied to an S Corp. So once you get to that level and you can scale up, then the S Corp is then that's when you can take advantage of making the 12 small payments. If let's say once you get to the but the estimated tax payments we can do at any point in time. If you owe $5,000 or $10,000, we can do a tax plan to then break that $10,000 up into 4 medium-sized payments. There's not really a guideline. It's really up to you. I will say this: the IRS wants their money by January 15th. A lot of people think it's April 15th. They just want the return by April 15th, but they actually want their money by January the 15th. That's why they take it out of everybody's paychecks. So if you don't send it by January the 15th through either your paycheck or quarterly tax payment, there's going to be a small penalty on your tax return that nobody really ever notices. It's not a lot, but it's there. So if you want to reduce that penalty, then you have to make the quarterly tax payments. Is it required? No, but it's really a preference. There's not really a hard definitive line there.
I think Allison had a question in the chat. She said, if we don't have receipts, then get audited.
Yeah, that's a good question. So it's very rare. In the 11 years I've been doing this, there have been 0 audits. They will send letters to ask for more information. But what happens in an audit is that they're going to ask you to prove your expenses. So then you've got to come up with your receipts. And if you can't, they're going to say, well, then we're going to back those expenses out and then recalculate your tax. So yeah, you would definitely probably owe more tax because you'd have less expenses at that point. If that makes sense, Allison.
Josh, can you explain to people the concept of like deducting some of your house space for business work?
Yeah, so this is a good point because this is one of the areas of the tax return that is, I always use the word red flaggy, okay? Because the IRS sort of understands that, moms sitting on their couch using their laptop and then writing off half of their house as their office is not really a good way to go. So they define a home office as something that is exclusively and regularly used for business. So like I have an office right here that's closed off. It's the only thing that is in my house for my office. I don't go anywhere else. So that would be a home office. So what happens at that point is then there's 2 ways on the tax return to do this. The IRS has kind of streamlined this process. So one is I can take the ratio of my home office to my house. So if it's 100 square feet over 1,000, then I have 10% of my house as my office. And once you put that in, they can take a standard home office expense for you. It can be up to about $1,500. Or you can say, I want to do the actual, meaning I'm going to tell you how much I paid for rent, how much I paid for electric, water, et cetera, et cetera, et cetera. And then they're going to prorate that for business and personal and the square footage and come up with a deduction there. But the big key is that it's the space that you exclusively use for business. So I know some people have workout rooms that they have or an office. I would just make sure to be accurate with that. I don't know if that answered it or not.
I don't know if this is, no, it did. I don't know if this is too high level, like deep or not, but kind of discussing for people like the, oh my gosh, I can't think what the $12,000 like individual deduction.
The standard deduction?
Yeah, the standard deduction versus it all being itemized and where that falls into play for them personally.
So depending on the situation, whether it's single, head of household, or married, the standard deduction is different, right? So single, I think, is $12,200. Married filing jointly is $24,400. So how this plays into your Beachbody income. So let's say, all right, let's start off with, it's sort of hard to talk through. I may be able to do this better with an actual, I don't know if you guys are okay with a tax return in front of you or not, but would that be okay for you guys? Okay, so give me a second. Let me just pull this up because at least I can walk you through it and how it sort of flows.
So like, just to give you an idea why I'm asking this question, like
Sure.
when I graduated from college and I was 22 years old and rented an apartment and didn't own a house and didn't have high interest because I didn't have student loans, like those are all things that go towards deductions for people. I didn't have a lot of my own deductions. I wasn't donating over $12,000 to charities and stuff. So my first year in taxes was filed under a standard deduction, which at the time I think was $10,050, but again, I'm a numbers person. So it was whatever the government decided for that year. But as my personal life has changed and now my property taxes and the interest on my house has put me past the $12,000 mark, my deductions are itemized, meaning every little bit counts. So when I donate $500 to the animal shelter, that goes towards my deductions, as does every little dollar from Beachbody. But if you might be in that pocket where you're still under standard deduction, I wanted them to understand like what that means in terms of what they're tracking from Beachbody. So
yeah, and it's sort of difficult because the IRS has made it rather difficult for people to itemize nowadays. So I'll sort of share this with you. This is a test tax return that I've done for you guys. So this is a tax return for 2019 single filer, right? No kids, no W-2s, just Beachbody income in essence, $25,000, just as an example. So the income comes here from the Schedule C or the business tax part of this return for $25,000, right? And then there's adjustments to the income and it drops it down. So here's where the standard or itemized comes in. So I forced it to say itemized so that I could show you what this looks like. Okay, so the itemized is deductions that will decrease your taxable income. So right now there's options for medical health insurance, medical expenses, i.e. prescriptions, doctors, copays, stuff like that. This medical expenses is very, very hard to use unless you're really sick and don't make a lot of money. So if we're using this, it's not a good sign. Taxes you paid is then real estate taxes, sales tax you paid on products throughout the year, which is calculated based on it, how many people in the household and your level of income. So we can always add to that. Let's say you bought a car and on the car there's sales tax for $2,000. We can add $2,000 to that and increase your itemized deductions. And then there's real estate taxes that we can add. So that number keeps adding up right now. So we're at 483, but if we added real estate taxes, it would jump up $5,000. And then there's mortgage interest and stuff like that. So all of these numbers keep adding up and adding up to for the itemized piece. So once we get to a place, so right now, I'll show you. So the standard deduction right now is $12,200. So unless you can get your real estate taxes, mortgage interest, charitable contributions, goodwill donations to add up to $12,200, it would make no sense to do anything less than the standard deduction. So that standard deduction just reduces your income. So it went from $23,234 and drops it down. So then the IRS taxes you on the lower amount. And then, so that's how that flows. It's your Beachbody income. Obviously, there's going to be other things here if you have a W-2 or dividends or something else, but Beachbody income, then it gets reduced down, standard deduction here. They also have a QBI deduction for owning your own business, so that reduces it again down to $8,800. And then they charge the tax on the $8,800. Now, because it's a Schedule C, sole proprietorship, then they add back in self-employment tax. So that would be the amount of money owed on $25,000 from Beachbody. I don't know if I know that's sort of fast and loose on the tax return, but I hope that answered it.
One thing I like to tell my coaches, and this might be like overshooting it, is I just keep half my paycheck in my savings account. And then when I have trips and stuff come up, it's easy for me to spend from that money and not worry about, oh, do I have enough money to pay taxes? And that like might be a lot for you, but for me, that works. And then I never worry at the end of the year, like, oh my gosh, I owe all this money. Like, where is it coming from?
Yeah, that's a lot. That's great.
Because hopefully you guys are growing your business a lot. Like this may freak you out because you're like, oh my gosh, I can't imagine making $25,000, but like it's totally possible. And you're a business owner. So this is part of running the business. And the cool thing is you can use people like Josh and write him off on your taxes for his services if this isn't your jam and you don't want to figure all this stuff out, but you just want to keep your expenses tracked and that sort of thing.
Yeah, I mean, I mean, $25,000. I mean, I've seen Beachbody coaches fly up from $1,000 to $25,000 in a year, easy. I mean, some of them are making 10 times that amount. So, I mean, $25,000 is very, very easy to attain. I mean, just from me looking at tax returns, it looks like it, but I'm not sure on the ground what y'all are doing. So, just as an idea, this is the business Schedule C tax return. So this is what you would actually fill out for your business. They are very limited in the fields that they put here, but they do allow us to add other items. So that's why that Schedule C form that I've given to Jessica is a little bit more in depth than this, because there's a line here that says other expenses that we can just fill up with other items. I don't like to put nail salon on there or something like that, because then it's sort of red flaggy, but uniforms or specialty clothing maybe. But this is what it would look like. So you could put your advertising, auto, insurance if you have it, legal professional fees, office expenses, travel and meals, etc., etc. So when utilities and interest are here, that's really if you own a building for your business, not your house. That's on a separate form.
Well, and like Danielle said, like Josh is really helpful if you're not big into this, but even if you are, and if you haven't picked up, like I love numbers and don't mind doing my own taxes. The first year Josh and I worked together, I paid him to do it and still spent the 3.5 hours doing it myself. He knows this is why it's funny, to compare my numbers to his, to be like, was it worth it? And he was able, even after what I had to spend to use his services, still save me more money. So he knows every little inch of that paperwork and what it takes to save you guys money, especially with your Beachbody income, that when it came to this year, I think I sent him a note like Jan 1, I was like, done doing this, like 30 minutes of my time to upload my stuff, but I didn't spend any time, doing it myself, because our time is money. Imagine those 4 hours I spent myself, like how many invites I could have been sending, what kind of way I could have been pushing my business forward. It really, really has paid off. So Josh, I don't know if I've said it enough, but I'm so thankful for you. And I know so many others on this call are sharing the same thing in the comments.
I appreciate that. And, I watched the Super Bowl and they had a commercial there where like H&R Block was saying like, oh, you can do it from your couch. I got mad because I was doing that years ago. People have been sending me their documents from their couch, and I've been spending 80 hours a week preparing. So I got pissed off at that. So yeah, Jessica, you definitely sent your stuff in and I appreciate it. And anybody else that would love to, I would definitely love to help. I saw something in here that says Josh's services don't cost 25 grand. Not even close. I mean, I think to prepare a tax return is like maybe $200. So, and then there's other services I offer. My website's really transparent, so you can see every single fee that I charge. So if you ever need, I've heard nightmare stories where people go to H&R Block and then they get done and they're like, yeah, I paid them like $600. And I'm like, $600 is crazy for a tax return. So, if anything, I mean, look at my website as like listen, this guy was doing it for cheaper. You guys got to save me some money as a comparison kind of a piece. So.
And just for everybody else, now that we're getting into the nitty gritty, can you explain a little bit of your uploading service, the vault, and the way that everything is secure?
Sure. Yeah.
Services?
Yeah. So I spent a bunch of money on this Smart Vault thing. It's a really secure online portal. I'll just share my screen again so y'all can see what I'm seeing. So this is my website. So you can see sort of about me. I mean, here's me. Here's me and my assistant, Sam. So here's my family and my kids, and here's my little guy. So, but on my website, there's a couple buttons. You can schedule a face-to-face meeting with me if you're local, or if you're not, there's a button for the Smart Vault. So the Smart Vault brings you to the login page. And once you log in there, you have your own secure portal that's so secure, it's like 12 characters long, uppercase, lowercase, number, exclamation point, or some other special character. It's crazy ridiculous. So once you log into that, you have everything in one place, meaning all your previous year tax returns, all your previous documents. I mean, I put everything there. Driver's licenses, checks, everything. So you can log in there and click on the client source documents for the TY19 and upload your W-2s, your Schedule C worksheet, your 1099 from Beachbody. I get a notification immediately saying Jessica just uploaded all this stuff on December 31st. And then I can get started on my end. So then once I get started on my end, I'll prepare everything that you've uploaded and I'll send you an email. Hey, Jessica, got everything great, looks good. We're missing this, 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 and this. Did you have any student loans? Did you spend any money for retirement, et cetera, trying to look for more deductions and piecing the puzzle together. So everything's done sort of via Zoom or email or phone or text, just so that we can stay on the same page and make sure that the entire tax return is complete. We're not missing anything. We're not missing any expenses or deductions. And this way, and then once everything's done, I upload everything to the Smart Vault so that when I do that, you get an email and said, Josh just uploaded your tax return, and then it's there. And then you can view it right then and there. So it's super secure. It's super easy. I mean, we do it all the time with a million other sort of websites and everything like that. The Smart Vault's just like that. So. What else, Jess?
Do you guys have any other questions that come to mind? I know I can think of one. Somebody was going through some business decision strategy on deciding how to build their own personal account versus their spouse account, which is actually just their boyfriend. And they were really concerned with hitting this $600 mark for their boyfriend, but they are continuously through the year purchasing product through that account. So just for that person who I have in mind, is that one of those things where you can say confidently, hey, if you're purchasing, let's make it simple, $100 a month of product from your spouse account, then you have that, call it range, to earn within that. So the $1,200 in the year without any tax implications.
That's exactly right. That's exactly right. I mean, if you spent more than $1,200, and if you spent more than you made, then great, you have a loss that will help out. But yeah, that's exactly right. If for every $100 you make, if you spend $100 and zero it out, then there's zero tax implication whatsoever.
So that's for everybody building their spouse account, the diamond and all of that. I mean, you think of every $50 that comes in from a challenge pack. You think of what you're keeping that account active at what cost of essentially Shakeology a month, that is a really good thing to use as leverage if you're struggling with boyfriend, sibling, or whoever has that extra account for you. Because I know that's been a huge thing that people ask since they have to give up social security numbers for this. So
one of the things I will say about that too is if you're not married, I don't know if you guys run into that where it's like boyfriend, girlfriend. I mean, is that, or does they have to be married to have the spouse account?
Well, I mean, Josh, that was my situation, right? We're not
right.
married. He's been my second account for 2 years.
Yes. So the only thing I would say on that is that your boyfriend is going to get the 1099, and then that 1099 has its own, or he has his own business tax return. And so expenses that you're shelling out for are going to have to go sort of towards that business tax return. So keep in mind that if you're not married, then you've got to sort of keep them separate.
So that's where, when I was explaining my document that I make you guys, and it had like the date, cost, category, what it was, and who was it mine or Kyle's account. So at the end of the year, it was just a filtered table. I can filter all of mine under Jess, send it to Josh, and all of the ones under Kyle, I print it, sum it up, and say, hey, here's your annual deductions from Beachbody. And so far, because I order everything extra outside of Shakeology that I do for my own monthly account to stay active for Success Club, everything else is under his account. He hasn't been at a point, at least in my business, where his income has exceeded the deductions that come from it. But that is a good point to make sure that they're separate if people are single. Anything else, you guys? Obviously, as questions come up, I'll post all of Josh's contact info so you can be in touch with him. I'm sure he would appreciate if you don't wait till April 13th to contact him. We're already done with all of our stuff.
Yeah, so the sooner the better. If you do contact me April the 13th, I will file an extension.
Josh, thank you.
Anytime, I'm here. So y'all got my cell phone number. It's up there behind me too. It's on my website. My wife hates how much I get texted, so.
That's a good problem to have.
Yeah, it's a double-edged sword for sure.
Thank you.
The last thing to share is he will brainstorm with you outside of just the Beachbody side. I mean,
I love that.
To Josh, we're getting married hopefully this year. I have no idea how that's going to impact. I know, right? Exciting. Don't want to plan it, but it's I have no idea how that's going to impact the way I should plan for my taxes, what I should do on my personal deductions from work in terms of withholdings. So Josh is send me X and X details. I can put together a plan so that you're not surprised come February next year with, this massive expense or whatever. So to me, that's huge. And just being able to plan ahead with somebody who knows their stuff and just tells you what you need to give them takes a ton of stress off of it.
Yeah. I mean, that's the biggest thing is preparation. I mean, it's so easy for me to take your information, put it into a tax plan, tweak a couple variables, and spit out a return that for next year to say, this doesn't look so good. We need to make a couple of changes here and here. So that's the biggest thing. How many times I've sat down and they're like, oh, well, I sold my rental property, or I took a huge distribution from my retirement, and then there's nothing I can do at that point. So there, you sit down with me, do a tax plan, 6 months ahead of time. There's things that we can do. There's strategies we can implement. And, it takes maybe an hour, maybe two at the most to sort of put together to have the peace of mind that you're on the right path for taxes. That's a huge thing.
Yeah. It's everything. If I was going to take, money that I have invested in the stock market right now, to cash out to pay for a wedding, those are going to be capital gains that I'll need to report under 2020 taxes. So I've personally been putting away cash so that I don't have to deal with that. But those are those small tax things. And like I said, I love these nitty gritty things, but if you don't, he answers every single one of those questions.
Yeah, I love that stuff.
All right, you guys all good? Thank you so much again.
Anytime.
All right, I'm sure people are going to love this recording. Have a good night. And
You too.
bye.
Bye.